All right, y'all. Welcome back to my channel. We're going to do the only price action video you will ever need. The only price action video you will ever need. So basically, price action. The market moves up, down, and sideways. But even when it moves sideways, it's still moving what? Up and down, okay? That's just how the market moves. It's either going to consolidate like this, up and down, or it's going to go up, but it's going to go up and down as it's going up. And then the same thing if it's going down. It's going to go up, it's going to go down, and it's going to keep going lower and lower, okay? That's it. So how do you read these actions and these things? Each swing low is a liquidity point. So you want a liquidity target to be taken out like this. We went below it and immediately reverse. Obviously, these weren't as strong. We did not reverse from these, okay? But the market is going to go and it's going to zigzag up and down. And where's it going to zigzag up and down to? Fair value gaps, breakers, which means we make a higher high, higher low, higher high, higher low. Once we close below the most previous low, now we're changing market direction to go lower. Some people set their limit orders at the breaker. As you see, we broke below this low. It came back up. It did not hit the breaker, unfortunately, and then we continued lower, but it hit the fair value gap. Some people like order blocks or supply and demand zones, which is the candle before the big move down. Some people do 2 candles, some people do 3. So it'd be this blue zone here. Some people wait for it to come back to there. I don't trade that because for me, I just don't see it working. It works for a lot of people throughout the day. I think you have to do it on higher time frames, but I guess it worked here. We have a big move up from this zone here, so maybe it worked here. Again, that's not my strategy, so you need to watch videos on that. I trade ICT and I love fair value gaps. However, I did add this lovely support resistance indicator to show where we're going to bounce off of, because sometimes with SMT, with ES, so ES could take, like NQ could take out this high, but ES wouldn't. You would still expect your reversal of this high and get taken out because of this support zone. You know, we might just bounce off of it. We might come close into it and then still reverse. You know what I'm saying? And then once we break through it, we go to the next zone. And then, you know, we break and retest it. That's how you trade. But you just always want to get on a chart at 9:30, 8:30, or whatever you prefer. What is it? This is Wednesday. Sorry, I'm on a 15-minute chart, so it's a little. Okay, so this was yesterday, Thursday. Great trade. We came into a fair value gap at 7:30. So by the time we got on the chart at 9:30, we were bullish. Now, you could target, we already broke above this high. You could target this next high. I targeted this high in this gap, and we wound up, obviously, as you see, just going up the rest of the day and taking out the previous day high. I didn't think we were going to do that. My final TP was going to be this right here. I wound up getting in and taking this trade up to this high here. And that's what I knew we were going to. Now, because some days we might go to this high and reverse. This high was in a fair value gap. That's why I also really liked it. But the fair value gap was respected once, so I should have expected us to inverse. But this was just a big, here to here is a big, that's a lot of points. So I add EMAs to just get a little bit of the volume for things like this. Just to know when we're finally breaking a direction, because this is pre-market, okay? This is midnight, okay? We have midnight here. So this is our day. This is our whole day for Thursday. We came in, we manipulated lower, which is, if you trade ICT, that's what you want. You want a manipulation lower, and then 9:30 we ride up higher, or you want a manipulation higher, and then we ride down lower at 9:30. This is a bread and butter daily PO3 setup. And we run up the rest of the day, which I love. I love when this happens, but sometimes it does not. However, say here, I want to make sure we fully like push below before we go lower. So I would enter a trade here, and then I would enter a buy until we break above. We came and retested. This happens, especially at 9:30. You can easily get faked out. That's why I did the EMAs. We need to get some space between, or they need to have space above or below an EMA at 9:30 before I'm getting in a trade. Obviously, on this day, we already had it, so you could just gotten buys right at 9:30, honestly, but I waited the first 3 minutes. In case we were going to reverse at this, that's why I waited. If we were reversing here, I was like, okay, but we wound up not. We wound up pushing, so I got in. Let's see another day. We have the 23rd. Boom. So this day is a little different. We came up, we manipulated, and then we came down. So this is a downward candle, or maybe even an indecisive candle, honestly, on the daily chart. Because we didn't really move. We opened and almost closed at the same spot. So it probably looks like a big wicks and then a small body is probably what this candle look like. However, at 9 o'clock, we did go up a good bit. I only got accidentally stopped out on my trailing stop here, but we did at 9:15 in a fair value gap, a bullish one. You could have bought buys right at 9:30, and then we kind of had this weird chop, but in a big range. It played out to my 400 ticks at a resistance zone, and then around 10:45 we got our reversal of the day. But I still got, we still got our 400 ticks at 9:30 if you wanted it. Because we came, retested the EMA in the 15-minute, and came into a fair value gap. As you see, that's what we're doing. We're making higher highs and higher lows. Higher highs, higher lows. Boom, boom, pushed. And then obviously we finally have a market structure shift on the 15-minute when we broke this low here. That breaker I just showed you earlier. That's when we're like, okay, we're going down. You could wait for the pullback. Obviously, it's 1 p.m., which is so late. But if you go on the 5-minute chart, you get the same thing. Or a 5-minute or a 3-minute, you got the same thing up here. You got like a swing low being broken. This tapped back into something, and then we came lower. I can show you what that looks like here. So you don't have to, if the 15-minute chart look like, okay, you've only got an entry tool way down here. But no, you do get one on the 3-minute chart. You see we have a swing low here. Let me delete all this for you so y'all can see. We have a swing low here. We closed above it. Now we did tap back into the breaker. Boom. Right, that lined up with this bearish fair value gap that we made on this displacement down. That is where you would enter. I wait for reactions off sometimes, so in case we IFEG to continue higher. So I probably would have got in and let it come down a little bit. And then I would have gotten in on something like this with my stop at the high instead. And then targeting this low, or I do 400. Wherever 400 is all I take now. Perf, boom, 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 boom. Now, old school me used to have it waiting right there or at the breaker. However, sometimes markets IFEG, like if we would have kept going higher, you would have been stopped out. So I let the market show me, because the market could have came down and then closed above the gap, retested the gap, and then continue higher. So I wait. I like to wait now, even though now my entries are a little suckier, because that was a better entry if you just set it right in that fair value gap or set it right at the breaker. And also I don't like setting things in breakers because like this. If I had my stop loss at the breaker and say your stop loss was tiny, you got stopped out and it went your way. Like that's a big little wick. If you did something like this. That was just like, your limit order versus like doing what the market is going to give you. Or even if you had your stop loss here, right at the top of the fair value gap, and it could have went through the fair value gap just as far as it did on the breaker. So I don't set limit orders anymore because I have a bracket with a stop loss and a take profit. To see how messy this was at 9:30 though, that's why it looks disgusting. But you still got 400 ticks if you wanted it, and obviously this was the better trade. So you just want to study this, like study the ups and downs of the market at certain times of the day, okay? And especially at 9:30. But you see the market will be moving up and then making higher highs and higher lows. This one is a fake out on the 3-minute. We made a lower low. Like we're going lower, and we did not. We continued higher. So you need to obviously, that's why you should start on a higher time frame first, like a 15-minute or a 1 hour. And you'll see these higher highs and higher lows a little more clearer. And like say we're making lower lows. We came up here. Where's our next liquidity low we want to take out here? So whatever time this was, noon, you wanted a short out of this little IFEG. We closed below it to the downside because it's green. Green means go up, red means go down. It's green, so we should be going back up off of it. When we close below it, we should be going down. We retested it on the 1 hour, and then we came low. Your first target should just be the closest low. That's a valid trade. That's probably a good, 600 ticks. And I take 4 off just clean price action we saw on the 1 hour. So let me show you what that looks like on a path. So basically, if we're in a downtrend, you want there to be a gap or order block or something here, even on the 1 hour or the 4 hour. You want to wait because say you're on the 3 minute, you might get a pullback on the 3 minute. You entered up here and we still go 600 ticks against you, but you were right in the direction. You want to look for a higher time frame, a 1 hour, a 15-minute fair value gap, or it could be a breaker. It could be like so some people trade breakers, some people trade fair value gaps, some people trade all three. You know what I'm saying? So you either want your entry, you want to wait till it hits this breaker or hits this fair value gap, and then you go on a lower time frame like a 3, a 2, a 5, whatever you prefer. Wait for us to get a reversal or a sign that we want to continue lower, which could be a green fair value gap getting disrespected to the downside. It could be, like I said, that market structure shift where like a swing low in the 1 minute is here, we close above it, and then we come back up into that gap, and then that's your short position. And you have a clear, why did I do this? You have a clear target, swing high or above the gap, depending on how you feel. Your clear target is that low that we just made before. And it usually gives you a good, risk to reward here. You get 1 and 2 if y'all want 1 and 2s. Or you'll scroll back and there'll be other swing lows and highs that were made on the way up that we didn't take out yet. So then you can, or you can trail. So if you get a home run and just every 50 ticks trail, whatever. It looks easier when you do it in a path like this, but you have to see it in the candles. Okay, so you don't want to trade a consolidation, and then you're like, how do we know if we're going to consolidate? Sometimes you don't. I've gotten in trades that were clean like this, a clean setup, a fair value gap, getting in a short, and then we just start trading sideways. And I'm like, so that's why I added the EMAs. I want to see us have space between the EMA, like say this is a good entry right here. We made a lower low. We came back into a fair value gap. We kind of did hit above it, but we're touching the EMA. I would not enter. Boom. We got space. We retapped it. Fair value gap. With space with the EMA, now I'm going to enter my short. Okay? That's how I like to do it now. That's why I added the EMAs. So like I said, it's just zigzagging up and zigzagging down, and your zigzag should come into a fair value gap or order block, a breaker or something. You know what I'm saying? And sometimes it's not going to happen. Like we got one here. This is again the 1 hour chart. We got this big fair value gap. We did come into it, but obviously it's huge, so we took days to go into it. And then you have a breaker here. So that also could be like your target on the higher time frame. So we see like last week we're going down. Where should we be targeting that day? This breaker in the middle of this fair value gap. I targeted just 400 ticks, but I could have took it so much lower. And then boom, we're in this gap. It's a bullish gap. We did not close below it. That means we're going what? Back up. This is our zigzag up and down. You see. Now where we are now. We came down in it again. Resistance zone. That's why I have this indicator. Because that's not an ICT anything. You almost get a breaker, but like that's something we will not call. The thing about ICT, you can call things very likely. However, sometimes we bounce at things and I'm like, why did we bounce there? And I'm like, oh, support resistance. Like this bounce here. I don't know what this is, but support resistance zones from previous swing highs and lows charted this. But in ICT, we don't want to trade this anyway. It's a chop. But you see how it bounced off these support resistance zones very nicely. And then now we're coming back out of this fair value gap. We took out this high. We're in this big bearish gap, so we could reverse or we could take out this next high. We'll see when the next week goes. But we're zigzagging up. And then, like I said, until we break a previous low, we need to break below this one. And then who knows, we could make another one next week. So then now we need to break this one before we have a market structure shift. And then again, it could keep going up again. You know, and now we don't have a reversal until we take out this low. You see what I'm saying? And the same thing on the way up. Same thing on the way up. We're breaking all these highs. We're breaking all these highs, and we're going up. And these are your targets on the way up. The most recent high being broken to the upside right here. We came back and retested it. Boom, we're up. Another breaker here in a fair value gap, which is a prime setup. Boom, we came back up. Another breaker here. And then as we're going up, your targets are each high. It's going to these highs for sure, or a zone if you want it. But don't just pull a home run. I mean, you could. If you're swing trading, well, these are equal highs. Equal highs are always a good target. I'd like to target equal highs on a lower time frame, though, however, not an hourly. But if you swing traded this, you got in way down here and you took it way up there. It's a bunch of money. And there you go. Zigzag up, zigzag down. You know what also helps? You can, not indicator, you can change your chart into a line. You can change your chart into a line with markers as well. And you see it a little better. You can see it a little better than your candles, okay? Go between the two, you know, see what you can see. But you see we're zigzagging up and we're zigzagging down. Fair value gaps. And then also just look at what time you're going to trade at. 8:30, what's happening at 8:30. 9:30, what's happening at 9:30. That's what you want to look at. 4 a.m., are you going to trade at 4 a.m.? You might be like, oh, this is a clean setup. Da, da, da. You're not going to be trading that early. However, 4 a.m., boom, 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 9, we finally get the close above the EMA with the cross and space at the open. So you did all that at 4 a.m. when you got the perfect entry at 9 because this still could have reversed at 4 or 6. We had a bearish fair value gap here. Then 8, we finally inversed it. So 8 o'clock, you might have got the best entry of the day on that day. But that's it, y'all. If you have any questions, let me know. I can clarify certain things or make better. I can talk about certain things more in depth. But that's price action in a nutshell. Zigzagging up, zigzagging down, going up, going down, and that's how the cookie crumbles.